Hi all, it's 29 September 2021 today. I'm going to touch on Chinese equities market daily review. Headline news: Evergrande to sell 1.5 billion US dollar stake in Chinese bank. And also, are the bond yields spiking up for real? Before I proceed, appreciate a like if you like this video and do subscribe to my YouTube channel so you can be kept updated on stock analysis and broad market review very frequently that I post on my YouTube channel. Here's a recap of what I mentioned yesterday. Hansing Spot. Hansing Spot wasn't out of the wood yesterday, and naturally, you will see later in my presentation that Hansing actually came down this morning. And Hansing Tech is also not out of the woods because it have not tested 6,300 and 6,600 points. Here's what happened. This morning, Hansing Tech actually came down 2.2% with a turnover of 12.14 billion within a range of 6,016 points to 6,128 points. It have not bounced fiercely above 6,100 points into the 6,300 points, and it's showing the lower range of 6,000 to 6,128 and close at 6,094 by morning session. Is not a good sign. Here's what happened for some of the component stocks like Bilibili, Kuaishoudan, Meituan, JA Online, and Tencent. You see that Bilibili was hit badly, and Kuaishoudan didn't continue its rebound yesterday, and it came back down 3.5% by morning session. But it's still relatively good for Kuaishoudan because its support level at $80 have not been touched, and day low so far is 80.7. I continue to be optimistic cautiously on Kuaishoudan as long as the 80 Hong Kong dollar point is not broken. Its recent low is around 64 Hong Kong dollar, but we have to watch out for it because right now it's still trying to gain traction in terms of getting more more daily users and monthly users, and ByteDance in fact have reached 1 billion monthly active users. So quite so that if you can catch up, then that's a very fantastic point, and they are earning a lot in terms of advertising revenue. So once they actually start to turn into profitability, I think there might be a share price catalyst, but that's only when it turn into profitability. Alibaba also continued to as a big witness and is down 2.4% this morning, but it did not appear in this list so far because the minimum to show on this list is down 2.8%. Gladly, Alibaba is only down 2.4%. NetEase didn't fall so badly, it's only down 2%. Xiaomi as well, but we have to watch out for Xiaomi because if it cannot hold this 21.5 Hong Kong dollar mark, sadly it may potentially go touch 20 Hong Kong dollar, which is a very strong support level. There's non-stop coverage of Evergrande stories and the bond yield spike fear. So this is the headline news, and that ceiling stand trigger some fear in the US 10-year bond yield, which went out to above 1.5%. As long as that discussion can reach a consensus in which the Congress reach a settlement to approve the debt ceiling to be lift upwards, then I believe there's a possibility for bond yield to recede and come back down to 1.4% and even 1.3 plus percent. That's basically the narrative why US markets was down 2% yesterday. So Hansing Spot, well, it opened gap down from yesterday to 24,500 points and opened at around 24,100 points. But during the day, morning session, it slowly receded its losses and went out to as close as 24,400 points, only to see a bit of shakiness and close in the morning session at 24,376. The good point to ask ourselves is, will PBOC come in to stabilize the market, especially well now Shanghai and Shenzhen market also fell. Can the afternoon session when the Europe market opens help to lift the Hansing Spot and Hansing Tech? Again, for people like me who already have decent equity exposure to Chinese equities, my proposal to myself is to take small bites like in Xiaomi. If there's continued price weakness, never go to have big bites. But for people who have zero equity exposure, actually the current price point are very attractive for certain stocks like Xiaomi. Another headline news that was being mentioned is that PBOC chief indicates today that the economy is showing strength and there's a chance for Chinese economy to maintain its 5 to 6% growth. That's a good point, but as you know, like what I mentioned earlier, Shanghai index was down 1.8%. It's still above 3,500 points, and for Shenzhen index is still above 14,000 points despite being down 1.4%. The usual big movers are the Guizhou Moutai, Ping An Insurance, which were down as well. But Chinese market is still down, but not as much, down slightly 10 points and very close to 3,200 points. And I remain watchful for all these indexes to see how they will perform. But European section wise, I do think that the current US futures, which are displaying an outwards right now, may potentially leave the European markets and hopefully in the afternoon section bring some calm back to the Hong Kong market. As always, this should not be construed as any investment or trading advice. Thank you all.